Welcome to the course on Circular 230 and Professional Responsibility. In this lesson, we'll explore the fundamental concepts of Circular 230 and the responsibilities of tax professionals when practicing before the Internal Revenue Service, IRS. General scope of Circular 230. Circular 230 is a set of regulations that governs the practice of tax professionals before the IRS. It encompasses various aspects, including defining who can practice before the IRS, outlining duties and obligations, specifying sanctions for violations, and describing disciplinary procedures. The 5 subparts of Circular 230. Circular 230 is divided into 5 subparts, each addressing specific areas of practice before the IRS. Rules relating to the authority to practice before the IRS. The duties and restrictions relating to practice before the IRS. Sanctions for violating the regulations. Rules applicable to disciplinary proceedings. General provisions. Office of Professional Responsibility, OPR. The Office of Professional Responsibility, OPR, supports the IRS's enforcement strategy by ensuring tax professionals adhere to regulations and laws. The OPR is responsible for interpreting and applying the rules governing practice before the IRS. Practice before Internal Revenue Service. The term, practice before Internal Revenue Service, encompasses various activities, such as preparing and filing documents, corresponding with the IRS, rendering written advice, and representing clients in conferences or hearings. It's essential for tax professionals to understand the scope of practice defined by Circular 230. Eligible practitioners. Circular 230 allows certain practitioners to practice before the IRS, provided they are not disbarred or suspended. Eligible practitioners include attorneys, certified public accountants, enrolled agents, enrolled actuaries, enrolled retirement plan agents, and registered tax return preparers. Diligence as to accuracy, Section 10.22. Diligence as to accuracy, Section 10.22, is one of the key sections within Circular 230. Practitioners are expected to exercise due diligence in various aspects, including preparing and filing tax returns, determining the correctness of representations, and relying on the work product of others. Diligence as to accuracy, reliance on others. Circular 230 acknowledges that practitioners can rely on the work product of others, provided reasonable care is exercised in engaging, supervising, training, and evaluating the person. This principle ensures that practitioners can trust the work of others but also emphasizes the importance of careful oversight. Consequences of violating diligence as to accuracy. Failure to meet the diligence as to accuracy requirements can lead to serious consequences, including disciplinary actions, censure, disqualification, and suspension. Practitioners must ensure that they provide correct information to both the IRS and clients, demonstrating competence and integrity. Incompetence and disreputable conduct, Section 10.51. Section 10.51 of Circular 230 addresses incompetence and disreputable conduct. It outlines various actions that can lead to sanctions, including criminal offenses, contemptuous conduct, giving false opinions, and willfully failing to sign or file tax returns. Due diligence and the earned income tax credit. Due diligence requirements extend to various aspects of tax practice, including the Earned Income Tax Credit, EITC. Tax practitioners must be vigilant in ensuring compliance with the EITC regulations due to its complexity and potential for fraudulent claims. Consequences of filing an incorrect EITC claim. Filing incorrect EITC claims can lead to penalties for both tax preparers and firms. Practitioners must comply with due diligence requirements, complete Form 8867 truthfully, and retain records to avoid penalties, loss of designation, and other disciplinary actions.